Hey folks, welcome to Pro Trader Strategies Market Commentary for Thursday, July the 18th. My name's Eric Wilkinson. Yep, you might recognize me as the Wolfman, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data across the pond. We got Great Britain's retail sales coming in surprisingly higher at 1%, expected to be a negative 0.3%. Last month's number was revised down from negative 0.5% to negative 0.6%, so a little bit lower there, but that revision's not making up for the nice beat on that headline number for retail sales out of Great Britain. And then we also got here in the United States, Philly Fed manufacturing, nice beat there also, 21 versus 5, so it showing that the economy in and around the East Coast there is actually doing a little bit better than I was expecting, and probably most people. Well, a lot of people were looking at recessionary numbers, or looking for recessionary numbers, I should say. We haven't seen any yet, but that would be something that might give us an indication going forward. I'm not seeing it there. It looks pretty good. Also, we got unemployment claims coming in at 216,000, expected to be 216,000, so nice reading there. And then finally, we got natural gas storages coming in at 63 billion cubic feet, expected to be 72 billion cubic feet, so slightly lower than expected. Not really anything major to note there. And then finally, we got Williams speaking, who is a FOMC member, probably going to talk his side of the coin. Anyway, I threw this line in the sand. Let's get on with the overall markets. I threw this line right here because we had seen a couple of times where that seemed to be looking like a area where we would act as support. And as a matter of fact, this morning when I drew that line, it had come down and clipped that area. So I threw that line in there. You can see we've broken below that. I didn't really see any support and resistance there other than it lands very close to being between two nodes, just slightly there above. But once we get below that, you can see there's a little low area for volume. A lot of times we'll peel right through that bounce, kind of bounce back and forth until we start filling out some of that area that is a lull. But we could easily see this market peel right through that again and back down to the $52.50 area, which is not too far away, only $3 from here. I don't know that we necessarily see that today. I don't think there's enough bearishness in crude oil to really drive that. I think that it's just a product of trying to take some profits here and get ahead of everything. One thing to note, though, we will be breaking that higher high and higher low. We now have a lower low, so breaking that trend going forward, which is also rather bearish going forward. All right, gold. Gold kind of topping out a little bit here. It's still in the 1400 handle after yesterday's massive rally. We've been testing that 1400 handle several times over last week. Almost every day last week, we came down and tested that 1400 handle in gold. Remember, I'm short GDXJ, which is basically a product of gold. It's the junior gold miners. So it follows gold. It's a little bit more of a lagger there. So as we're kind of topping out here in gold, it seems like GDXJ really started moving higher yesterday on this, what we were talking about. As a matter of fact, I think that's probably what was happening here. Is yesterday we talked about getting this line right there, and we've got a bit of a triangle, and once we break out of that area, I probably should, let me try and draw that. As a matter of fact, I think I drew it more along the lines of, whoops, that's not what I want. I want the line. I pulled it so it would be like that because we broke out yesterday on it. So, so what we're talking about is once we break out above and outside of this little triangle where we talked about that winding up of the rubber band and snapping. We snapped out of there yesterday. Market really went aggressive. Today, although we are looking at a bit of a top right there. So I have GDXJ on. It expires tomorrow. I'm going to hold on to this a little bit longer. It's not breaking out quite as aggressively as I was expecting. I thought yesterday I really was close to pulling the trigger on that, but I could redraw some of these and make it. Plus gold just started looking a little bit weak today when I was looking to pull that trigger. So I'm going to hold off, let this ride out, play the probabilities, maybe get a bit of a correction. Hopefully we get this chart set up like that, and I get a candle that is going to give me confirmation, kind of like that tomorrow. Actually, I need more one that looks like that. But I am looking for it to peel back down. I'm going to hold off probably a little bit longer here. All right, we've got bonds coming off just slightly. Really a quiet day for the most part. VIX in the teens. The Dow Jones Industrial Average only really off about 55 points. Just not feeling like there's a whole lot of volume or follow through with this market. We did create those highs. They were created overnight, except for obviously in an index that only trades during the day sessions. But when we flip over to like the NASDAQ, these highs are something that the market is going to be keeping an eye on. And if the market is to rebound, either tomorrow or whatever, the next couple of days, as long as we don't break below the 78 Fibonacci, which is right here. As long as we don't break below that, you can see that we have the higher highs and the higher lows. But obviously, if we break below that, then that creates that break of the pattern, and it would look like it's going to roll over. I don't know that we're going to see that right now. Like I've talked about, I think the economy is doing okay. I don't think that we are really like knocking it out of the park right now, and I don't think that we are moving towards a recession. I just think that, this is going to be a decent economy that just trudges along, and that's really what we want. Because if you talk about the past probably 30 years or so, we've seen booms and busts like once a decade that really are crushing people. We had the dot-com and going into 2000. All of those things are really financially stressful for especially baby boomers or people that are retiring, and or some of us that are investing. I would much rather just see the market kind of trudging along, a couple of corrections here and there, but have no massive corrections that really blow people out. All right, and then let's move over to the E-mini S&Ps. We can see that they're unchanged on the day, creating another low right there. But as long as we kind of keep that higher highs, higher lows, we are still in a very much bullish pattern here, and not really seeing a whole lot. It's not an inside day. It's just a slow volume trudge to the downside, more so probably taking profits, because we've been looking at earnings, right? And the earnings have been pretty good. The banks have been pretty good. Some of the retail has been doing okay. This isn't any of those. It's Philip Morris. So I played Philip Morris to the upside because this Jewel thing, I don't know if you guys have heard of Jewel. I think it's Juul or something. But it's these little stick pins that are kind of like cigarettes. And they are really popular with the teenagers right now, in and around the 18, I guess. So I wanted to play Philip Morris to the upside because I think that they are pivoting and getting more and more involved in those types of instruments for consuming nicotine, and I think it's probably going to be better than like the Nicorette and all of that stuff, because smoking is more of an oral hand kind of fixation and gives people something to do, I believe. So I think that the Juuls are more of a crossover from the cigarette than, say, gum. All right, so I played Philip Morris the upside also. I put all this stuff out yesterday, and if you guys remember with Philip Morris, I went in, or you wouldn't remember because we didn't talk about it, but anyway, in this, I went in July, sold the 79 puts in there for, 63 cents, and I was able to buy those back for the Philip Morris, so I was able to get back for a nickel. Put those in before the open, so a nice trade there on that. And then I also did the Honeywell to the upside. Now this is something I was not really planning on trading. I was really kind of looking at eBay. I was considering eBay. Netflix, I wanted to play to the downside. I didn't do that. eBay, I wasn't really sure. And IBM, I wanted to play to the upside, but I always play IBM to the upside and I get spanked on it. So I started looking at doing a strangle. And then I felt like I was looking to force that trade and didn't do any of those three and ended up going with Philip Morris and Honeywell to the upside. But something I'm going to be noticing or looking out for from now on with Honeywell ahead of earnings. This is kind of something crazy I hadn't really noticed. If you look ahead of earnings, they have a tendency, other than this day right there, somebody comes in and spanks, crushes Honeywell the day before their earnings release. You can see they get crushed almost every day. Somebody's coming in and just selling tons of equities in Honeywell the day before the earnings. And then their earnings come out and we see that massive rally right back almost every single time. So that's going to be something I'm going to be keeping an eye on with Honeywell the day before that binary event, because they get crushed and then they have a tendency to beat on it and we start rallying thereafter. So time to probably get in on Honeywell is right after earnings. Do the earnings setup trades like I talk about with my earnings trades, where we have gone past the earnings, we've gotten that volatility crush, now we're setting up for the next earnings cycle. So this might be something to do, or just the day before the earnings, or the morning of that day before, the morning eve, I don't know what you would say there, but that morning before you have a full day of trading before their earnings, it might be the day to start selling Honeywell. But anyway, I didn't. I got in there and played it to the upside and did the July, sold the 160 puts for Honeywell. I should have written all this stuff down. Honeywell, I ended up selling for 73 cents and bought them back for 10 cents, actually 9. And put those in before the number before the open, and ended up getting hit on those. You can't take that. Take it easy.